Thank you for standing by, and welcome to the Limeade Third Quarter Investor Conference Call. All participants are in a listen-only mode. There will be a presentation followed by a question-and-answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Henry Albrecht, CEO. Please go ahead.
Thank you, Operator. Limeade CEO Henry Albrecht here, presenting our cash flow results for the third quarter ended 30 September 2021. Joining me today is Todd Sparks, Chief Financial Officer of Limeade. Welcome, Todd. I'd like to start today's call by focusing on the main takeaways for the quarter. We've experienced a significant increase in our late-stage pipeline to the finalist and verbal stage during the quarter as we made solid progress with new potential enterprise customers. We anticipate converting a high percentage of the late-stage pipeline in customers and CAR in Q4 2021. The integration of TinyPulse proceeded well during the quarter, and we readied for the launch of an immersive well-being solution into the mid-market based on the Limeade One technology. We look forward to updating investors on our progress with this initiative in subsequent periods. During Q3 2021, Limeade signed 3 new large enterprise contracts, which included 2 well-being and 1 engagement customer in the financial services, technology, and energy sectors, respectively. In the prior corresponding period, the company signed 3 contracts. Once again, I remind investors that our contracting cycle is heavily weighted to the second half of the year, and in particular, Q4, with customer contracts often leading to launches in the first half of the following year. With that said, I'm pleased to report that we have closed our first large enterprise contract in Q4 2021 as well, with a large healthcare provider. The company's total sales and marketing pipeline, including TinyPulse at Q3 2021, recorded a decline of 4% versus Q2 2021 to $151 million, driven predominantly by a decline in the early stage qualifying or marketing pipeline. Importantly, the company's finalist and verbal pipeline was up 78% to $16.1 million versus Q2 2021, reflecting strong progression down the pipeline for core Limeade well-being solutions. Limeade has observed an improvement in employee benefit budgets with a level of activity within prospect enterprise customers that has started to return to a more normal pre-COVID-19 conditions in our core North American well-being market. Therefore, we look forward to the Q4 of 2021 for new contract wins, which will provide the company with a platform for growth in 2022 and beyond. Overall year-to-date net revenue retention was 84% as at 30 September 2021. Limeade direct customer NRR was 86%, a decline of 10% versus the PCP, while indirect or partner NRR was 65%. Direct customer NRR was impacted by the termination of a top 10 customer, American Airlines, during the period, $1.9 million in contracted annual recurring revenue, and the continued impact of COVID-19 on customer retention. As per previous quarters, the indirect channel, which tends to focus on mid-market companies, continues to experience customer churn. Limeade is now focused on pursuing healthier channel relationships with more strategic partners moving forward. As at 30 September 2021, indirect CAR represented just 6.7% of total company CAR versus 10.3% as at fiscal year 20. I will now turn the call over to Todd Sparks, CFO, who will provide a brief summary of our quarterly cash flow information as released to the ASX this morning. Please go ahead, Todd.
Thank you, Henry. I am pleased to report Limeade remains in a strong financial position with our cash position of $15.1 million as at 30 September 2021. The company also maintains a $15 million undrawn debt facility with Comerica Bank. During the quarter, Limeade announced the acquisition of TinyPulse, a Seattle and Saigon-based leader in employee listening software, for $8.8 million in cash, funded from existing cash reserves. The final adjusted transaction cost paid in cash was $8.9 million. As announced to ASX, the transaction was completed on 29 July 2021. During the quarter, the company recorded cash receipts from customers of $16.1 million. down 32% versus the prior corresponding period, or PCP, reflecting the timing effect of a large annual subscription payment from a significant enterprise customer, which was expected in Q3 2021. It in turn was collected in October, and lower overall contracted annual recurring revenue compared to FY20 for the Limeade core business. Had this enterprise customer payment been received during Q3 2021, as per the prior year, the company would have recorded positive operating cash flows for the quarter. Net cash receipts from customers after adjusting for payments made in relation to the sale of third-party products and services was $12 million, down 37% versus the PCP. Third-party payments of $4 million were down 14% versus the PCP, though sequentially were up 21% when compared to Q2 2021, reflecting an increase in customer employee incentive funding payments. Cash payments during the quarter were primarily directed towards the following costs: staff of $10.3 million, administration and corporate of $3.4 million, operating of $1 million, marketing $0.7 million, and research and development $0.8 million. The 18% increase in staff costs relative to Q2 2021 reflects the additional headcount acquired as part of the TinyPulse acquisition. The increase in Limeade R&D of 56% versus Q2 2021 in part reflects the acquisition of TinyPulse R&D Center in Vietnam and additional investments into the Limeade platform made during the quarter. The company recorded operating cash flows of $4.1 million for the quarter, an increase of 104% on Q2 2021, which, as mentioned, was a timing effect associated with the slightly delayed upfront subscription payment made from the single large customer who traditionally pays in Q3 of each year. Investing cash flows for the quarter of $9.6 million was driven by the $8.9 million payment to acquire TinyPulse, representing the final adjusted price for the business. Limeade capitalized software development costs incurred during the quarter decreased 1% to $0.8 million. Turning now to our expectations for the full year, FY 2021. Limeade maintains financial guidance for FY 2021 as follows: revenue of $50 to $53 million, earnings before interest, tax, depreciation, and amortization, or EBITDA, a loss of $5 to $8 million, and a net loss after tax of $7 to $10 million. I will now turn the call over to Henry for concluding remarks ahead of Q&A.
Thanks, Todd. We're certainly excited by what opportunities lie ahead for Limeade, with particular reference to our Microsoft Viva collaboration and the completion of the TinyPulse acquisition, which, as I've highlighted, provides us with new opportunities for growth in the enterprise and mid-markets, respectively. As a leader in immersive employee well-being solutions that create healthy employee experiences, Limeade is uniquely positioned to benefit from the major structural shift in the way people work worldwide. I would now like to hand over to the operator for the question and answer session. Thank you.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up the handset to ask your question. Your first question comes from Tim Lawson from Macquarie. Please go ahead.
Hi, gentlemen. Thanks for taking my questions. Just in terms of the pipeline, you've referenced the prior period, but there's some seasonality in the way the pipeline. Can you just talk about how you're feeling about the sort of growth given the sort of seasonality rather than just the prior period?
Yeah, that's a good question, Tim. Thank you. Henry Albrecht here, CEO. That's true. There is seasonality, so you should expect some increase. I would say the increase is probably a little bit more than we expected headed into Q4, and we're very excited about the late stage kind of verbal award and contracting status of much of the pipeline. So we're definitely looking forward to a strong Q4. I don't have at my fingertips the year-over-year exact corresponding metric, but we'd be happy to provide that in future updates.
Okay, thank you. And obviously you've talked about the sort of timing of the cash flow falling across the 2 quarters. But can you just a more sort of general comment on the cash flow overall? Because obviously that'll have consequences to the Q3 cash flow if we adjust it back. So just the EBITDA guidance, and you've got the acquisition there on TinyPulse, just how you're thinking about the cash flow for the business more generally?
Yeah, I'll take the first part of that, and then Todd can answer in a more rigorous way. I would say, we're happy going through, as you all know, a challenging year and a half to have preserved, the capital that we raised in our IPO, and I think we've been strong stewards of that capital with a strong balance sheet, and still see opportunities to invest it in both organic and inorganic growth opportunities. So that's the kind of strategic answer to the question. Todd, do you want to handle the financial angle to that, please?
Yeah, I would just comment that, our operating cash flows from Q3 were a negative $4 million. Again, there was a one-time upfront payment that we were expecting in the period that had we received it, it would have caused us to be positive for the quarter. Last year we were quite a bit positive, largely because we did receive that payment. So on an apples to apples basis, there's probably about a $5 million swing, right, from this year versus last year. And really the driver for that is, we've made a considerable amount of investment in R&D for our platform development, as we've communicated. And obviously we've inherited, roughly 70 people in Seattle and Saigon with respect to TinyPulse. And, I would say, typically our Q4 cash flows tend to be a little bit negative. And so, if you look at Q4 of 2019 and Q4 of 2020, respectively, they were, a little more than 2 million and 1 million. And so, given that we've increased that R&D spend and absorbed TinyPulse, I think you can expect a little bit of an increase there. That said, we don't forecast our quarterly cash flows.
Yeah, okay. And just 2 more questions. Just the NRR at 86%. Just if you adjusted for American Airlines, what does it look like on a sort of X the American Airlines loss?
I would say, you can roughly assume that about, I would say, half of the deterioration in churn versus a year ago was due to American Airlines.
Okay. And then just with the mid-market offer, is that an indirect or direct channel for the sale of that product? Because you obviously had some churn issues with the indirect channel. Can you just talk about where that mid-market offer is placed into the distribution?
Yes. You can think of it as taking the best practices of Limeade learned over the last decade and streamlining an offering for the mid-market based on our Limeade One platform, based on the same technology we use for our enterprise customers, but in a streamlined offering. So it's leveraging existing technology. It will be sold direct. There are consultants and others who influence the purchase in this market, but we are primarily focused right now on the direct channel for selling that to the mid-market as well. We define mid-market, by the way, as generally speaking 500 to 5,000 employees, and enterprise would be 5,000 plus. You can think of the middle of that range as the sweet spot for us.
Okay, thank you.
Thank you.
Thank you, Tim. Appreciate your questions.
Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. We'll now pause a moment to allow for any final questions to come through. Your next question comes from John Sneam from 72 Capital. Please go ahead. Pardon me, John, you may have yourself on mute. There are no further questions at this time. I'll now hand back to Mr. Albrecht for closing remarks.
Thank you, operator. If anyone had technical challenges, feel free to contact our investor relations team here at Limeade. Thank you, operator. Thank you all for joining the call today and for your questions. We look forward to catching up again at our fourth quarter results, if not sooner. Onward.
That does conclude our conference for today. Thank you for participating. You may now disconnect.